I am one of the dumbest successful trader you'll ever meet, and I still make thousands of dollars per month with this stupid simple strategy. And fun fact, what actually makes me profitable is I simplify my strategy as much as possible. I don't use any random indicators or adding up any random confluences. No, I like to keep it simple and short. And this is actually what keeps me profitable. Now, obviously, don't get me wrong, I still had my, dark sides where I was over trading, where I was, strategy hooping, and I was watching a bunch of, YouTube videos, understanding what type of strategy works for me. And after understanding this one little thing, everything has changed. So stick to this video because you can really benefit from it. So the first thing that we are going to do is going to be mark out key levels, which is going to be a 30-minute liquidity. Right after, we need to find our entry model, and finally, trade management. We need to manage our trade, which is going to be stop loss, take profit, etc. So number one is going to be find key areas, which is going to be liquidity. Number two is going to be find our entry model, and number three is going to be trade management or stop loss, take profit, etc. So the first thing that we are going to do is going to be look at our daily bias. Okay, so we need a daily bias. Every trader needs a daily bias, and our daily bias is going to be 30-minute liquidities. We are going to mark out 30-minute liquidities on the upside and on the downside. So let me show you a visual example. Let's say the market actually goes up, goes lower, and forms this 30-minute liquidity on the upside and this 30-minute liquidity on the downside. So what we are going to do is we are going to wait for the market to manipulate and to take out key areas, which is going to be this 30-minute liquidity and this 30-minute liquidity on the downside. So when the market hits our key areas, we are going to wait for an entry model. Okay, so the market actually manipulates and takes out our key area, which is going to be a 30-minute liquidity on the upside. We are going to wait and zoom in on the 5 or 3 minutes to find our entry model. And when we see that the market is making our entry model, is creating our entry model, we then take the trade to the downside and we wait for the market to then go lower to manipulate right here. So those ranges of liquidity is actually where the market makes money off of. Right here we have thousands of stop losses from other traders who are risking $15,000, $10,000, $100,000, whatever. And this is the range of liquidity. This is exactly where the market needs to go in. This is the pool of liquidity where market stops out a lot of traders. So which are buy lines and sell lines. And as I talked to you before, we need to mark our key levels, which is going to be a liquidity right here and a liquidity right here. And if the market takes out the high liquidity, then this is where we are going to sell. And if the market takes this low liquidity, this is where we are going to buy. So if the market takes out the higher liquidity, this is going to be our sell side line, and this is where we are going to take a trade. So the market goes higher, manipulates and takes our key area and then forms our entry model. This is where we are going to take the trade and we are going to target the downside. Okay, so the market goes lower and this is where we are going to profit off of. Another visual example that I can show to you is right here. The market goes higher, creates this 30-minute liquidity on the downside, and then creates this 30-minute liquidity on the upside, goes lower and sweeps out this 30-minute liquidity on the downside. And this is going to be our key level. So the market manipulates, goes lower, and this is going to be our buy side line. This is where we are going to actually take the trade if the market shows my model, obviously. And as you can see, the market actually goes higher, and then this is where we are going to take the trade, and this is where we're going to profit off of. So once again, this is going to be our sell side. This is where we are going to sell, and this is going to be our buy side. This is going to be where we are going to buy. Now, why is the market actually moving that way? What's the purpose behind this? And I can tell you this confidently, this is actually where a lot of people lose trades. So the market forms this 30-minute liquidity, goes higher, it forms this 30-minute liquidity, and then breaks structure to the downside. And a lot of traders sell right here and put their stop loss above this level right here. And then what does the market do? The market actually manipulates, takes those stop losses, takes them out, and this is going to be our key liquidity. This is going to be our 30-minute liquidity right here. This is our 30-minute liquidity. And then what do? We wait for the market to manipulate, and it actually manipulated. Then we are going to wait for entry model. Our entry model plays out, and this is where we are going to sell. And then we put our stop loss above this level, and then the market actually moves lower to then sweep out this liquidity area, which is going to be right here. So this is actually how the market is moving, and I will show you examples on the charts too. So the first thing that you need to know is going to be mark out key areas, which is going to be 30-minute liquidities on the upside and on the downside. Now we have a 30-minute right here and another 30-minute liquidity right here, and then we are going to wait for the market to sweep and to hit those levels. So now I'm going to go on the 3-minute and I'm going to wait for the market to test that level. So let's see what's going to happen. Boom. And then we are going to wait for entry model. My entry model is going to be a breakout structure to the downside, a breakup block, or a fair value gap. And then I switch on the 1 minute to then wait for a fair value gap, and then I enter. This is what my entry model is. Now obviously maybe it's a little bit confusing, and I will also make videos about this. If you actually want to know my entry trigger, watch other videos. I also have other videos about this, and this is actually pretty easy. So I wait for my model. In this case, going to be a breakout structure to the downside, and boom. Right here we have a breakout structure to the downside. So this is going to be the breakout structure. I will mark out my breaker block. This is going to be my breaker block, and then I'm going to wait for the market to retrace into this confluence. And the market, as you can see, already retraced into this. Right here, as you can see, it retraced into it. And then I'm going to switch to the 1 minute for a fair value gap. So boom, right here we have this 1 minute fair value gap right there. Okay, so this is going to be a 1 minute fair value gap. The market touches that zone, and then I'm going to enter directly without hesitating. So boom, I enter and I put my stop loss above the 5 minute zone. And after I actually take the trade, we see that the market formed another 30-minute liquidity right here. So now I am going to prioritize this 30-minute liquidity because the market formed this 30-minute liquidity. This is actually going to be my new key area. So I put my take profit right here, and actually this is a very great risk to reward ratio, as you can see. So let me see if this actually plays out. We will see what's going to happen. And boom, as you can see, it actually played out, and you actually made a 4.8%. So if you would risk $1,000 on this trade, you would literally make $4,000. So let me now show you another example. We are on the 30-minute, and I have to find my key areas. We have a 30-minute low right here and a 30-minute high right here. Okay, so this is going to be my key areas. So this is going to be my sell side, and this is going to be my buy side right here. Okay, so if the market takes out this liquidity, I'm going to short. If the market takes out this liquidity instead, I'm going to go longs. This is how it actually works. So now I'm going to switch on the 3 minute, and I'm going to wait for the market to take out any key areas. Okay, so it looks like the market wants to actually take out this key area. Okay, because it's all right. Okay, so the market takes out this key area, and it breaks structure to the downside directly. Okay, it breaks structure to the downside, and I'm going to mark out my fair value gap. This is one of my confluences that I use. Okay, I wait for the market to retrace. Boom, it retraces, and I am going to move on into the 1 minute, and I'm going to wait for a 1 minute fair value gap. So do I see a 1 minute fair value gap? Boom, as you can see, we have a 1 minute fair value gap right here. And I'm going to move my stop loss above the 5 minute zone, which is going to be right here. And I'm going to target this key area. So we will see what's going to happen. Does it actually work? And boom, the market actually takes out this level, right? So this risk to reward is not crazy, but I mean, come on, it happened. It's part of the game. Sometimes we will have a great trade, sometimes we will have a decent trade, and sometimes we will even lose, which is completely normal. So in this trade, if you risk $1,000, you made $1,300, which is not bad, obviously. So after the market took out this level, this is where I am going lower. This is where my sell side is, and this is actually where I took a sell. My stop loss, take profit. This is where the market moved to the downside. Now, if the market goes lower, takes out this level, then this is where I actually go longs, and this is where I, go higher and target this level. Okay, in that specific case, it was actually this trade, but now you understand how it actually works. Let me now show you the last example. So we have to identify our market or key levels. Okay, so this is going to be our first key level right here, and then we have to find our second key level, and this is going to be our second key level. Okay, so we have right here the buy side and the sell side. I'm going to wait for the market to take one of those. So boom, right here and right here. Okay, so now wait for the market to take out one of those key levels. Let's see what's going to happen. All right, okay, this was way too fast. So after the market took out this level, I need to wait for a breakout structure. Do I see a breakout structure? Boom, so this is the breakout structure, and I'm going to mark out my confluences, which is going to be either a fair value gap or a breaker block. In that specific case, we have a breaker block right here. So this is going to be our breaker block, and I'm going to wait for the market to retrace into it. So the market retraces into it. I'm going to move into the 1 minute, and I'm going to wait for the market to create me a 1 minute fair value gap. And fun fact, the market actually created this 1 minute fair value gap, as you can see right here. So this is a bullish 1 minute fair value gap, and the market already went lower. Then I'm gonna buy right here, and I'm going to put my stop loss underneath this zone, which is already right here, funny enough. And then I target the higher draw on liquidity, which is going to be this one. So we'll see what's going to happen. By the way, those trades, me personally, I will really not extend this really high. I will personally maybe take partials right here or close full position right here. But for the case of this video, I'm gonna, leave it like this. So we'll see what's gonna happen. And boom, this is actually a great trade. As you can see, this is a 1-to-2 risk to reward ratio. So if you would risk $1,000, you will literally make $5,000. Like imagine you making $5,000 in a day. This is pretty absurd, bro. So guys, that was the strategy video. I hope you enjoyed. If you have any questions, don't forget to comment. I read the comments. And by the way, don't forget to join my free Discord. I created a free Discord. Join, it's link in the description. And if you actually want to be mentored by me, then click the link in the description. This is where you will actually meet me in person. So it's going to be only limited spots. I don't have time for everyone because my time is, only limited. But yeah, I hope you enjoyed. See you in the next one.